This current situation in that market is nothing. It's nothing. It's literally nothing. I mean, it's wild for me to listen to like gold people talk about 10,000 gold and then look at Bitcoin at 65 grand and be like, man, this is nuts, dude. This is totally nuts. I mean, that's the buy. That's the buy.
Navigating global market cycles requires separating emotional hype from realistic wealth preservation strategies. Blindly chasing precious metals during vertical spikes often leaves investors trapped in overvalued positions with stagnant capital. E.B. Tucker, a seasoned macro analyst, investor, and author, asserts that physical gold serves strictly as a foundational asset rather than an aggressive growth engine. With total global gold valued around $32 trillion, predictions claiming it will soar to $100 trillion or hit $8,000 in the near term are mathematically improbable exaggerations driven by emotional hype. True price discovery isn't dictated by central bank rate shifts, but by leverage ratios within the futures market. Adding an independent market perspective, intelligent portfolio management requires recognizing that gold simply preserves baseline purchasing power. Investors who view precious metals as active wealth builders miss out on productive, cash-flowing opportunities across broader markets. Locking in gains when leverage unwinds remains the most prudent way to maintain financial agility. Now, we present the clips from E.B. Tucker's interview. Before we continue to discuss this, please hit the like button, subscribe to the channel, and ring the bell icon. Thank you, and enjoy the video.
I sold some gold in the first quarter. What I did is, in my book, I originally talked about how you have physical gold and you have ETF gold, and then you have gold stocks. I'm not really interested in gold stocks at all. I haven't been for some time. And I sold the ETF gold and booked gains. And I wish I sold a little bit more. I mean, I think the physical gold, I think maybe you want to try to just not have that. Let me just make this clear to people. I see my life, like the second book I wrote, I told everyone exactly why I live the way I do, which increasingly I think is just weird to people. But I put it out there because some people, I think, have benefited tremendously from it. I see myself as running my own sort of life corporation. And people that think that they're going to make drastic returns in gold, I think are sort of off kilter. I mean, I don't understand how that's going to happen. Like they'll say to me, don't you think gold's going to do this? And I say, no. And they think, well, you're not positive on gold. No, I like gold. I like gold a lot. I mean, I wrote a whole book about gold. Have you written a book about gold? No. Okay. So gold's worth like what, $32 trillion or something like that. Like that's a lot of money, you know, for that to go like to 100 trillion, I think is like totally unlikely. And then people say, yeah, well, 30 years from now it might. Yeah. Well, I mean, 30 years from now, like, I mean, you know, do you know how many things you could do over 30 years? I mean, like, I think the way I bought gold back in the day was all about thinking about stability for myself, you know. So if I made some money, I would buy a little bit of gold. And then if I made some more money, I would buy a little bit of gold. And then if I made a lot of money, you know, I would buy like a little, you know, like a larger bar of gold. So I just did this for like 25 years. And that's why, to me, it's like gold doesn't need to be this gigantic percentage of net worth. I mean, it's like there is such a thing as too much of a foundation in your house. You know, nobody pours like a 20-foot concrete foundation in their house. It's like, you know, 3 feet does like just as good of a job, right? So anyway, that's how I see it, David. And so people, I think they mistake that for me not being positive. And I'm very positive about gold. I think you got a big run. And now if you go from 4,100 to like 4,500, like who really cares about that? I mean, I just don't understand how that moves the needle, because like that shouldn't change the reason I own the gold to begin with, if that makes sense. Like I'm sort of happy to have it as part of my foundation, which I want my foundation to get wider. I just don't really need it to get deeper. I don't know that interest rates have the same effect that they had, you know, back in the 70s and the 80s and the 90s. I think this was more calibrated to the movements in the gold price. You know, I think the thing that moves the gold price, like I really, really believe this, like at the core of my soul, or my EB's generative consciousness, is leverage ratios in the futures market. I think the futures market completely controls the gold price. And that doesn't mean there's a person, by the way, that's controlling the gold price. I think that's like a Wizard of Oz type thing. It means that if you change the leverage rates on futures, you change the gold price. That's what I think. And so I have not seen evidence that that rate changes based on interest rate changes. I've seen that rate changes based on uh, factors that are sort of like above the pay grade of even wealthy people, meaning certain people that are pinned down by trades. I think there's some things going on that are like a little different, and I just don't think it really matters that much. But I watch this market. I've watched it for 25 years. I feel like I've done a pretty good job of being involved in this market. Kind of got out, with my head not on fire. And I really believe that, so I doubt that interest rate changes are what move the gold price. I really doubt it. I think the gold price is still working off too big of a run. 5,600 was too much. It's too much. And by the way, we wrote about it. It's like we talked about this every
we say it was too much in retrospect, but I remember when it was approaching 5,000, people were calling for 8,000 as the next target. So
it's crazy.
It just created more hype.
That's what I tried to tell people in the essay, was that you try selling into that. Like, I would call someone up to sell, okay? And they would say, is E.B. Tucker the why gold, why now? Are you seriously selling? Have you lost your mind? And I said, I'm concerned I might have lost my mind. Do you get what I'm saying? It wasn't like it was obvious. It was like the thing was going up, 5-6% a day. I mean, like, try selling into that. It's frightening. But that's why I don't think in extremes. I mean, I sold a little bit, and maybe I should have sold a little bit more, but I'm fine with that. We made money. We moved on. We sold mining stocks in April. I mean, that was like maybe a month too late or something, but who knows? I mean, it's not, this is not about perfection. This is about making money, David. This is what I don't understand about people. Make money, spend money, enjoy yourself, because you're going to be dead. So what is the point? I mean, there is no perfect way to do it. You got to live, man. I mean, I drug my kids all over, Martha's Vineyard. We saw everything. I told them next year we'll go to Nantucket. We'll go hang out with Dave Portnoy. So the thing is that you got to live, and you got to keep your train moving. That's the thing people miss. It's not about like, there is no like thing that it's going to happen. Like, you're going to get some trade right, and then time stops or something. You got to keep going, man. That's the deal. And I just feel like I'm the only person that says that, but it really works, man. It really, like, I've got a great life, man. And it's not like an accident. I mean, this is how I got involved in gold. This thing I'm telling you right now, this is my thinking that got me involved in gold like many years ago. It was like too cheap, so we just got involved.
Hoarding physical gold in preparation for a total economic collapse represents a deeply flawed financial strategy rooted in fear rather than market logic. In a complete systemic breakdown, physical bullion cannot guarantee personal security or purchasing power, as chaotic societal forces inevitably strip unprotected physical assets away. Derivatives and institutional leverage ratios in the futures market dictate short-term price swings far more than retail panic. From an analytical standpoint, betting on total societal failure is a statistical dead end. A superior approach focuses on structural agility, pairing a modest physical gold foundation with dynamic assets like Bitcoin and liquid capital. Harvesting gains during euphoric rallies builds real-world wealth, allowing investors to participate in global expansion rather than retreating into bunker mentality paralysis. Now, let's get back to the interview.
What are you going to do the day after the collapse if you've put your whole net worth in gold? I want to know in the comments section, what are you going to do? You're going to get in your car, and what are you going to have, a Fred Flintstone car? How are you going to get gas? Where are you going to go? I don't understand the logic. People say the society is going to collapse and I'm going to be smart because I'm going to have all this gold. You know what's going to happen to that person, David? Somebody's going to come over and take the gold from them, okay? The thing is that the likelihood of society breaking down and you coming out on top is low. You don't have enough ammunition. I don't care how much ammunition you have, it's not enough. And it's an unlikely outcome, and it's a daydream. It's a fantasy daydream. I bet you anything that what happens is that the better way to live is to flow along and to see all these things that are happening as gigantic opportunities for a better life. That's the deal, man. That's what's happening. That's happening right now. It's happening. It's going to keep happening. And when you see it, you're not going to unsee it. You're not going, and then guess what else is going to happen? You're going to say, I love having gold. I love having gold. But let me tell you something, like a small percentage of gold is plenty. I mean, it's plenty of gold. Like there is a limit to how much of a percentage of net worth should really be in gold. I mean, it's sort of insane to like go way past that limit because you sort of check out of a changing world. And there's just no point in that. Like, what are you going to do? You're going to sit in the woods with your gold and protect it all the time? I mean, good luck, man. Like, seriously, I think you can live in a way that you learn about gold, how cool it is, how great it is, how much it adds to your personal independence. And you get yourself some gold, you get yourself some Bitcoin, you get yourself a couple other things you need, you truck on down the road, man, and the world gets bigger, not smaller. I think when you think about things with societal collapse, your world gets smaller. And I also think people are wrong. And when they tell me this stuff, they just sound crazy. Because the other thing that is nuts, David, is I'm not even an optimistic person. I told this guy last week in Martha's Vineyard, I was like, don't mistake me for an optimist. I'm like not an optimist at all. I just think it's insane to think that you're going to have societal breakdown and you're going to own some penny stock or like some, significant number of gold bars or whatever it is you own. And you're going to like come out of this as they're going to be writing Forbes articles about you. There won't be any Forbes because they'll burn the building down. So like what I'm trying to say to you is like, I just don't think it works. I don't think it works. I mean, that logic I think is flawed, and I don't think people make money. And I think it's like fear-based. And what I want to do is to live a better life. That's what I want to do. I want to learn about stuff, write a great newsletter, make money, and have fun. That's what I want to do. And I think that's like a better way to live than like digging a hole in the ground and trying to survive an apocalypse that never happens.
Executing a successful long-term investment framework demands stripping away speculative hype and managing capital with ruthless discipline. Mining stocks, paper ETFs, and leveraged equities frequently introduce operational drag, making physical asset allocation or disciplined profit-taking far more effective during bull cycles. When gold surges past key technical levels like $5,600, retail euphoria inevitably sparks wildly inflated target predictions above $8,000. However, these parabolic extensions routinely collapse once futures market leverage unwinds and normalizes. Evaluating this cycle through a broader economic lens reveals a fundamental truth: paper gains mean nothing if they are never realized. Accumulating wealth solely for the sake of holding static gold bars ignores the primary purpose of capital, which is to enhance quality of life, secure personal independence, and fund meaningful experiences. Physical money should serve as a modest structural floor, much like a standard house foundation, while active capital is continuously deployed into cash-generating assets and modern digital assets like Bitcoin. Locking in profits during periods of extreme market euphoria ensures long-term wealth retention, giving investors the freedom to navigate shifting macro environments while actively enjoying their financial success. Share your thoughts about this interview in the comment section below. If you found this video helpful, please hit the like button, subscribe to the channel, and ring the bell icon. Thanks for watching.